Hi again, everybody. Welcome to this issue of Update. I'm Rick Geiler with SilverSide Insurance Marketing in Scottsdale, Arizona. I'm going to move pretty quick today, value everybody's time, and get through a few points. So let's move along. Today's update is for agents only. So we're going to try to restrict this here a little bit. We're going to keep it close to the vest on some product specifics. So please, if you're not an agent, go ahead and log off now and forward this to your agent for any questions, or call us here at SilverSide at 480-998-1286. If you've joined me in the past on some of these updates, you'll know I always like to talk about what's in the news, and specifically the biggest thing impacting our business, being the life and annuity business and advisory business in general, is how low interest rates are. One of the chief measuring sticks and drivers of what we consider interest rates is the U.S. government 10-year note, and you'll see today in Chicago it closed at a 1.406 yield, consistently at the very, very bottom end of a 40, 50, 60-year range, maybe lifetime range. Historically, the average on the yield is around 4%. We're at 1.4, very low interest rate environment. We'll take a look. The S&P 500 index. Here is a 50, going back to 1950, so about a 62-year chart on the S&P 500 index. Yes, that's real, folks. I did not invent this. That's what we're looking at. We are looking at decades worth of volatility swinging back and forth every 3-4 years here. So very, very high volatility in the stocks and equities and S&P 500 market. Very little discernible direction. So that's creating a lot of uncertainty. Given the low interest rate environment, it's really affecting the options we have and the advice we're able to give. Let's look at one more factor. This is from RasmussenReports.com, the big polling service. And a couple months back, they say just 35% of people are confident that Medicare will be able to pay them all their promised benefits. So a lot of uncertainty there about who's going to cover our health care costs as we age. So that's going to lead into today's question. Today's question is, what if you could immediately double your client's money after tax? Okay, that's a pretty bold statement, pretty broad. What exactly do you mean by that? Well, if you take a look at a product, a fixed index single premium whole life, and it's SilverSide, we have a few different carriers we work with that we might recommend from time to time. Today I'm going to essentially highlight our favorite one. And I'm going to make another statement. If you are in the senior market, in the life and annuities business, and you give advice, and you don't have a product cut out of this mold that you have in your offering, you are not fully offering the benefits of the market these days to your clients. So here we're talking about, I ask, what if you could double? Well, here, fixed index single premium whole life, female age 65, $100,000 premium equals a guaranteed $221,596 guaranteed death benefit day one. So obviously, when we talk about doubling, it's going to affect age, sex, are going to affect exactly whether we're able to double money or whether we're able to offer 50, 60, 70% leveraging or whatever. You say, that's great, Rick. I wasn't really thinking about death benefit per se when you said double the client's money. Okay, fine. Let's get back to that. Let's look at a couple more features of this product. 10% immediate premium bonus helps drive the cash values, the death benefit, all the values. This has a guaranteed return of premium anytime, day one, year 10, year 20, anytime. You put $100,000 into this product, you can have $100,000 back. It is whole life insurance. It has guaranteed cash value, and in fact, over time, that guaranteed cash value is also guaranteed to grow. So you're going to get past your guaranteed return of premium in a few years. It also has index crediting for more potential growth. To get off of the guarantees, if you're index crediting, if you are able to take advantage of the ratcheting effect of that stock market whipsawing back and forth, you might even get better growth than with the guarantees. We like to sell this product off of the guaranteed side. Anything you can get on the index crediting side is gravy. It's that strong. You can sell it off the guarantees. And then I'm going to talk about the best illness rider in the business. And now I'm getting back to what if you could double your client's money. This illness rider, I'm going to call it the best in the business. If anybody has something better, go ahead and give me a call and show it to me. This offers 3% of the death benefit per month in a cash tax-free indemnity. And what that's going to max out at is going to be 33 months. 3% a month is going to add up to 33 months with a $250,000 cap on this benefit. And there's a little bit more math. I've essentially given you the basics of it here, and there's no tricks, but there are a couple of nuances to that, so you're going to want to get a full illustration from us to find out exactly what I mean by that. But 3% per month of the death benefit in a tax-free indemnity. Okay, now I've doubled your money. Great. What do I got to do to get it? Let's take a look. I took this right off of the claim form. This is what your client has to do to trigger the benefit. They take this to their physician. The physician answers this question. Does the patient have a chronic illness that prevents him or her from being able to perform any of the following activities of daily living without significant assistance from another person? If your physician can check 2 of those and fill out about 2 or 3 more lines, when was the last time you examined the patient? What are your credentials? What's your name? What's your address? If your physician can fill that out, very simple, less than 1-page form, you trigger that benefit, you get 3% of the death benefit per month in cash. That's what I have to talk to you about today. I want to invite everybody to give me a call, give my office a call. Anybody at SilverSide can run an illustration. You probably have a client or 2 in mind. Maybe even your mom. I put my mom into this. You can call us, get an illustration. We'll run you through the details, every nuance to the numbers, how they work, how the underwriting works. It's a Table 4 standard simplified issue product. No medical exams, no fluid draws. It's a simple product. There's no tricks here. It's from a good carrier when we talk about on a regular basis on these updates. So give us a call, and I promised Stephen, our marketing director, I would point out our social links over here. If you're moving in that direction, go ahead and visit us on any of these. And thank you so much for being with me today. And that's it for this issue of Update. Take care. We do.